Hey, it's Jack from Alphacharts with a market overview video. Today is February 8th, 2025. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching this video. If you haven't done so, please like and subscribe to my channel. It helps me out a bunch and gets my video in front of more faces. So I really do appreciate that. All right, so let's get into this video because there's a big question is what's going on in the market, and this is what we are going to try to um, decipher. So here we go. So this is the SPY, and you see we have this beautiful, we can call this a cup and handle type pattern. But if you notice down here, we are showing a lot of distribution in this pattern. So I think that this is one of those things where caution, when we see this amount of distribution, needs to be taken, right? This is not like, like a forever bull type of market. Now, where can this go? Well, I think we have a couple of potential points if this does pull back. And I think the first one is going to be right around this, 585 to 580, maybe even a undercut over here around 575, right? A pullback back into this area is very possible, and potentially even all the way back to the 200-day moving average, around 565 or so. I think that's very, very possible, and that would create this double bottom type of pattern, and then we potentially could go much higher from there. If you look on the weekly chart, the SPY was down 0.17 on the week, and now let's compare that to the RSP. RSP, which is the equal weighted S&P 500, that was down 0.56, so actually much more than the SPY, and just a much choppier trade. So what does that tell us? So that basically tells us that people are selling not only those mega cap names like Apple and Amazon and things of that nature, but also all the in between stocks as well. Again, it's just a measure of breadth, and that's that tells you breadth is weakening, right? This is not like breadth expanding. This is breadth weakening a little bit. When we go to the Qs, you have a very similar idea with distribution showing up on the charts. Again, it's cap weighted, and you see these lower kind of highs that are showing up as well. We do have some higher lows. That's a positive aspect of this, but it just tells you that we got this consolidation. Again, I could probably draw a trend line, just something like that, right? So you have the higher lows there, you have the lower highs, and there's this consolidation. It's funny, you're going to see this type of look a little bit lower when we check out the mags, but that'll be in just a moment. The Qs were up actually on the week 0.13, and the equal weighted Qs were up 0.83. So that's kind of a little bit more strength in the technology sectors. But overall, I think that they're still in a little bit of trouble. Again, you have the equal weighted Qs. It got back up to this general area and it reversed pretty hard actually on Friday, above the 50-day. So that's kind of nice, but still a lot of question marks there. Mid caps have a very, very rough looking chart right there. Very similar to RSP if you look at it. Very, very similar looking chart. And back below the 50-day, again, it's an equal weighted or mostly equal weighted chart, lots of distribution showing up. So I don't think it looks all that good, as well as your IWM, again, with that same distributive look underneath the 50-day, underneath the Trump VWAP, election VWAP. Again, not a very good look. All right, so before we get to that next section, I want to let you know that on YouTube I have a members group that it's $10 a month. You get a ton of information. You get weekend video where I go over not only what you see now, but also internals on the market, and I go over extended watch list, and that's really idea generation. I also on the weekend offer a focus list video. You can see it right in here. The focus list video breaks down to about anywhere from 3 to 5 names of very actionable, tight reward to risk type of scenarios that might be actionable if you like the name. I also put annotated charts also in the posts for members of that group. I do a midweek video on Tuesday and Thursday. So you get 4 videos plus the posts, and it's only $10 a month. It's super, super affordable. If you think this kind of information can help you, click on that join button and come see if it is. It's month to month, so it's real easy to be a part of. All right, so let's go into the next section. The next section is these key sectors. We have the XLF, and XLF is breaking out all-time highs, kind of reverse, but as long as it holds above, 5150 or so, I think that it looks really, really good. Now, what doesn't look good? SMH. By the way, XLF on the week, before we move on, was up 60.66%, 66 basis points. Where SMH was also up almost the same amount, actually, but look how much different this looks. Again, this is on the weekly chart. I mean, it just can't get out of its own way, right? And I think there's a big problem in the market if we can get resolution to this, and hopefully to the upside. But if this breaks down, I think that we're gonna be in a much harder trading environment if we have semiconductors breaking down, right? Bull markets have them going up, bearish to choppy markets, and these are not going up. And right now we don't have them going up. And you say, well, that's cap weighted. What about the equal weighted semiconductors? Well, XSD is that product, and it's back to the 200-day moving average. The 50-day is flat. And again, it looks like a very choppy. If it starts to lose this 200-day, it can get pretty nasty, I think, pretty quickly. Transports had a good day on Friday, but when we look at it, it's mostly due to Uber, which is about 17% or so. So it's one of the largest with UNP, which is a train stock, one of the largest holdings in transports. So yes, it had a nice day, but it's really due to the move of one big, big holding. So what would we do? We look at the equal weighted, right? That gives a better feel of what's going on. And in the equal weighted position, we have really a pretty decent move low. Actually, it's about even on the week, but underneath the 50-day moving average and really can't get above. That's a problem too, right? Listen, if it retakes on Monday morning $90 or so, different story. I think it's a great outcome. As long as the transports, especially equal weighted, are under the 50-day and look like they want to move lower, then I think that over the next couple of weeks or even a couple of months, we may be in a very rough trading environment. Now, housing is a sector that I love to watch because it's such an important part of the economy, right? Yeah, it does jobs, it does people have to buy things to put in the house, all the supplies that go into the houses, right? You have to buy all the wood and sheetrock and all that kind of stuff. So it's a huge part of the economy. And really, we have what could be a pretty nice topping pattern here, right? I mean, let's just give it a line. You can have shoulder, head, maybe the start of a right shoulder right there. And that could be a problem, right? A big problem. Because if this confirms and we break down from here, we'll call that, anywhere from 95 to 100 is that neckline. It's never an exact spot. If we break down from here, things can get really, really rough. Now we haven't yet. So you know what? You can't get too bearish quite yet. But if this does kind of comes into this area and then breaks down from it, I think that the market's in a load of trouble. Um, this cross over here, the 50 over the 200, they call that the death cross. I'm not that dramatic, so it's important because it shows, that the trend is changing, and this 200 is very, very flat with price under it, so that's never a good sign. So again, not looking good. XHB is a more equal weighted home construction, home building type of ETF, has enough of a similar look, and there's that cross we were just talking about. Now, I mentioned before that on the Qs, we had this consolidation after this kind of base. And when we look at the MAGs, which is the MAG 7 ETF, there's your base and a very, very similar consolidation. It just shows you how much influence they have on the NASDAQ. Again, this could easily break down from here and just even retest here. That's about 7 to 8% lower. And again, an 8% move lower in the Mag 7 could have a very strong effect on the indexes and would have a very strong effect on the indexes as well as the broader market. And that could be a painful move. So I think we have to be very, very careful, especially in the short run, that this does not break down. You can see in the Mag 7, I like to pull this up and look at what it actually holds. And you see Meta is almost 7% of it, with Tesla being 2.4%, and everything else is between 5 and 6%. So a reasonably good distribution, with Tesla being, kind of the smaller size in there. So yeah, so Mag 7 breaking down would be a big problem. There you go. It's, going through all the indexes and these key sectors. I think we have to be very cautious of this market. And I think we have to be ready for this to potentially break down. But is it going to be the end of the world? I don't think that we're in an end of the world type of moment. We could be, right? But heck, if it's the end of the world, money doesn't matter at that point anyway. So let's bet that it's not the end of the world, and that even if we get a pullback of 10%, that's going to be a normal pullback that markets go through once or twice a year. And that'll just set up the next base for us to really try to be aggressive off of, and hopefully make some strong money in both directions. All right. If you like the video, please like and subscribe. Check out that YouTube. Join my membership, and y'all have a great day. Take care.